Good afternoon and welcome to your weekly FX Options Report. Today is Wednesday, June 23rd, 2010. In midweek trade, the broader U.S. equity markets are trading flat. Focuses on the end of the Federal Reserve's meeting, and the FOMC interest rate decision will be coming out later this afternoon. Now, investors will be paying close attention to the economic assessment by the Fed Reserve. Expectations do call for an unchanged reading for the interest rate. And in terms of global economic data releases, we saw that U.S. New home sales for the month of May plunged to a fresh cyclical low. Now, the Commerce Department reported that sales fell to a seasonally adjusted annual rate of 300,000. Now, May's reading tumbled as the federal tax credit for U.S. home buyers expired. And over in the Eurozone, we did see that the flash PMI came in weaker than expected at 56 in May from the 56.4 in the previous month. Shifting our focus on over to the spot FX market, the U.S. dollar is trading mixed against the major currencies, lower against the yen and the British pound, but higher against the euro currency. Now, the British pound is seeing strength following the release of the U.K. budget report. Moody's investors also said that the U.K. budget was supportive of the country's AAA rating. And also worthy of mention is that the latest BOE minutes from the latest meeting showed that one MPC member voted in favor of a rate hike. One way to trade your views on U.S. dollar strength or weakness is to take a look at IC's FX options. One advantage is that they are U.S. dollar denominated. For more information, you can go to www.fxoptions.com. And in our next segment, we will bring you our daily trend report and take a closer look at all the other major IC FX option pairs. And starting out with the AUX, which is the U.S. currency against the Australian dollar, that pair is under pressure. Now, the AUX is coming back below the neckline of a double bottom, and the preference of trading central analysts is short positions below the pivot of 120 with targets standing at 111.20 and 106.75 in extension. Moving on to the BPX, which is the U.S. currency against the British pound, the upside does prevail. Now, the pair is pulling back on its new support or former resistance ahead of a rebound. The preference of trading central analysts for the BPX is long positions above the pivot of 67 with targets currently standing at 70 and 73 in extension. For the CDD, which is the U.S. currency against the Canadian dollar, the key short-term resistance currently stands at 106.50. The RSI is mixed with a bearish bias, and the preference of trading central analysts is short positions below 106.50 with targets standing at 101.40 and 99.50 in extension. And for the EUI, which is the U.S. dollar against the euro, the upside does prevail. Now, the pair is pulling back on its new support ahead of a rebound, and the preference of trading central analysts for the EUI is long positions above the pivot of 78 with targets at 84 and 86 in extension. For the SFC, which is the U.S. dollar against the Swiss franc, a rebound is expected. Now, the pair is pulling back on its support, and the RSI is mixed and does call for caution. For the SFC, the preference of trading central analysts is long positions above 110 with targets standing at 114.50 and 117 in extension. Last but not least for this segment, let's take a look at the YUK, which is the U.S. currency against the Japanese yen. Now, caution is advised for that pair, and it is pulling back on its support. Now, the RSI for the YUK is mixed and calls for caution. The preference of trading central analysts for that pair is short positions below 90 with targets at 93 and 95 in extension. Moving on to our next segment, which is our weekly trend opinion. Last week, we did see that the U.S. currency weakened against the majors. Now, Trading Central did take advantage of this weakness in the U.S. dollar, and they were able to take a profit on a trade alert they made last week, which was the call on the AUM, and they did make a 100% profit on that pair. In terms of portfolio performance, it currently stands at 1,553.55% since its inception, which was in August of 2007. And since the beginning of this year, their portfolio is higher by 273.45%. Now, we do have one trade alert for you right now, which is the CDD. Now, this week, Trading Central analysts are considering puts on that pair. It does stand below the resistance and should face further weakness as the RSI is badly directed. Trading Central analysts will be also looking at other exotic pairs against the U.S. dollar, including the PZO, NZD, and the AUX. Looking ahead to next week, Trading Central analysts will be looking at the following pairs, including the EUI, BPX, YUK, and the SFC. They will be looking at those pairs because they are challenging strong technical levels. The EUI is rebounding on its intermediary support and the daily RSI is trending higher. The BPX remains within a bullish channel, challenging its support, and the RSI does call for caution. Now, for the YUK, the outlook is unclear, and the pair is ranging above its supports. For the SFC, that pair is under pressure and currently challenging its support at 110, and a break below that level does call for further weakness. That does wrap it up for a weekly FX Options report. Thanks for watching, and have a great day.